morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, the weekend webinar, as you know, is our special time to try to keep the markets in focus in a bit larger picture. During the week, we're in, we're out with day traders. On the weekends, we like to take a little step back and take a look at these markets and see where it looks like they're heading for next. Now, undoubtedly, many of you traders have been watching this rally for the last 10, 12 days, and I'm sure you were expecting a decent-sized rally on Friday. We were, and the Omni actually had a green pointing up arrow on Friday. But the trade didn't work. We got stopped. Well, we never actually got stopped out. We let the market come down to a level where you can tell it was going to fail, and we took a quick loss. It wasn't that bad, but it didn't go up, and we were looking for the upside. Now, I did a lot of homework today. Traders, as you know, well, last night into today, traders, as you know, I am a bear in a bearish market acting as a bear. But the fact that the market started to rally for so many days, I sidestepped it for a few days and then started to look at it again. What I can see here is that, boy, oh boy, we are at a critical juncture in the indices right now, traders, and I'm here to say something. Failure to rise above the Omni proprietary average in the indices will produce fresh new lows. In my opinion, if these markets don't get up and go in the next couple of days, we will end up seeing fresh new lows on this bear move. At the same time, getting above the Omni average will produce a rally for a few days to a few weeks. In other words, if we get above the Omni average, there's a good shot I'm going to take. Don't fall in love with the upside off the board. Now, I mentioned that to you on the last video, which was Thursday night for Friday. And I said if this market goes where we expect it to go, I'm going to take don't fall in love with the upside off the board for a few days. The market did not go. In fact, it looked to me like a major failure took place on Friday. Now, I have a series of charts I'd like to show you. Traders, the theme of this video is failure to get above the average will produce a major drop. Getting above the average will get me to take don't fall in love with the upside off the board. So the theme of the video and these next few charts that you're about to see is all about what you think and what we think about where this market is right now. Are we at a critical juncture? I think when you see this series of charts coming at you now, you will realize absolutely yes, we are at a critical juncture. And one of the best things that you probably will do here, if you are a trader and not a gambler, and we do not gamble at the Omni Trading Academy, the best thing you could probably do Sunday night into Monday is sidestep this once again, and I think you'll see why. Let's go to the charts, traders. Okay, traders, the first chart you see before you is the S&P June daily bar chart. You can see clearly that we are just about ready to take out the top side of this parallel channel, or at least that's what we thought would have happened on Friday. More importantly, we are right at the Omni proprietary average, traders. It comes in right here, right there. The market hit it 3 or 4 times this week and just kept failing at it. Now it's also beginning to fail at the top of this channel. Let's see what's going on here. Indicators are certainly looking really bearish right now. Failure at the top of the channel like we had here, here, and here is starting to make me say, you know what? Doesn't look like this thing's ever going to make it out of the channel, and back down to fresh new lows is where we will end up. We are in a bear market. There's no reason for us to get overly bullish. The fact that it's been sitting up here for a week now made me say, hey, let's give this market some credit. Let's give it the benefit of the doubt. Let's see if it'll rock and roll. And instead, it did nothing on Friday and started to look bearish. Traders, again, I will repeat, we are at a very important juncture in the marketplace. Failure here means new lows coming soon. Getting above here equates to a nice breakout, traders, which should give us a few days to a few weeks rally. That's what I see. We are not gamblers at the Omni Trading Academy. We never gamble. So the likely event or the best thing you can do here as a professional trader and analyst is sidestep this at least for Sunday night into some of Monday and see what it wants to give us. Again, I'll be more than happy to buy a breakout, but now the indicators have turned. The market has failed a few times here, and it looks like it is failing. But let's look a little closer here. I'm going to blow this up a little larger for you and show you the S&P cash market now. All right, traders, here we are. S&P cash market. As you can see, that very same trend channel, we're not quite even at it yet. We failed exactly at the Omni average. It never even got to the top of the channel and started to fail. Here, 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 almost here, and now here, failures at the top of this channel. So out the window seems to go my sympathy for the markets and hope that it would rally, and I have to trade what I see. As of Friday, the cash S&P is showing a failure. I don't know if it's going to actually be a failure, but as of Friday, that's what we're getting here, traders. So you've seen the S&P. I'm going to rip right through a few more charts here. Pay attention. I wanted to show you what's going on. Okay, traders. Now we are looking at the Dow Jones Transportation Average, which is deemed to be the leader of the U.S. indices. The transportation average hasn't gotten anywhere near the Omni average and put a down day in. And even more importantly, it has failed so far to take out its previous contract low. On the way down from the big bull, we put in a low. And we rallied up, tested that low, and broke it. But on the way back up, I thought maybe we'd at least test that low, illustrated or shown here with that line. We've never gotten to that low, and it's already turned. So the leader is saying, you know what? I don't like what I smell here, and it started to point back down. And wait until you see what the indicators look like. So you've seen S&P and Dow Jones Transportation Average. Let's look further here, traders. Next chart that you are looking at is the Dow Jones Industrial Average, traders. Here, did not get above the Omni average, produced a big drop. Here, we did not get above the Omni average, produced a big drop. Here we are testing the Omni average in a bear market, but it did get, look at the channel here. Although it's not a straight line, it did get very close to the channel, but it failed right there. And here's the Omni average absolutely failing. We didn't even touch it and started to head back down, and now indicators are pointing towards the downside. So you see what's going on here, right, traders? It looks like the Omni average is repelling. It's knocking these markets back down. The markets are trying to go there, and it just pushes it away. So let's see what we're going to get. So now you've seen a few of the U.S. markets. There's one more that I'd like to show you in this stack, but let's see what's behind this picture here. Oh, baby, we're going international on you now. Look at this, the FTSE. So far, traders, there have been 3 valid failures in the FTSE. And let me tell you something about the FTSE. It is a leading indicator to the S&P market. You may not know that, but the FTSE usually makes a move before the U.S. S&P. Failure at the Omni average here, failure at the Omni average here, already down much lower than the 2 times it tried to get to the Omni average. So, internationally, you're seeing a failure at the very same average, traders. These markets are not the same markets. They are from other countries, completely different, with different stocks, still showing you the exact same look. Let's look further. There's more charts to show you here. All right, traders, as we keep that international theme going, we are now looking at the DAX, the German DAX. It, too, did get above that trend channel that we had. However, look at what happened when it got near the Omni average. The market has failed in the past at the Omni average and looks like it is failing again. Here's the Omni average. Here's the market. It turned and dropped on Friday. Very interesting, traders. The U.S. markets seem to be failing at the Omni average, and they're failing to break out of that channel. The DAX, which got out of the channel, failed at the average. The FTSE's failing at the average. I have a feeling that we are done with this little bull move that we've had, but let's see. All right, traders, now here's the U.S. market I was referring to before. This one is interesting to say the least. This is the NASDAQ, which does lead the S&P around. This is the Omni average. Look at how many days the NASDAQ's been above the Omni average. 1, 2, 3, 4, 5, 6, 7, 8, 9 days above our average. You can see why I had to talk about getting long on Friday. How do you not get long something that looks like that? Triple top traders. I've done many videos and many classes about triple tops. We buy triple tops. We sell double tops. One top, two tops short. One top, two top, three tops usually produces a breakout. Now maybe you're getting the picture of why you're going to have to sidestep this for a day or two, because look at what's happening here. One of the leading telling indicators is pointing straight up and above the average. Everything else is below the average and can't seem to get above it. That makes a professional trader take a back seat for a day or two and wonder what's coming next. We are not gamblers traders. If you just bought this outright with everything I just showed you bearish, it makes you a gambler. If you buy those bearish charts because this looks bullish, again, it makes you a gambler. Do your homework here, traders. There's more charts to show you. Let's keep looking. Now, these are the indicators and what they look like on the U.S. indices. This indicator is wrapped around the S&P cash market. This very bearish look. This is the commodity channel index, the CCI. It usually can get itself somewhere up here and then fails miserably. Okay? Here we are. The hook is in place. The red crossed the blue, and that looks very bearish. On Friday, it looked a little more bullish, like maybe it would take out that line. By the end of Friday, it started pointing down clearly. That's the CCI, Commodity Channel Index. So let's look at a few more indicators. Next, on the S&P, you have slow stochastics, up higher than usual. Red pointing down now, just about ready to cross the green. This was pointing up Friday morning. It was pointing down by Friday's close. This is usually where you have your turnarounds. Let's keep looking. It's going to get really interesting at the end of this chart segment, traders. You'll see this whole picture come together. Now, you're looking at relative strength index wrapped around the June S&P. Relative strength index clearly pointing down. RSI, for traders that don't understand what that is, RSI equals relative strength index. Relative strength is now clearly pointing lower. Okay, traders, let's look. It's going to get hot here. We have the directional movement indicator, or the DMI. Directional movement indicator clearly now pointing towards a short. The green pointing down, the red pointing down. I like it better when the red points up as the green points down, but they're both pointing towards downward movement, the red and the green average of the DMI. All right, traders, now that you've seen some indicators and world indices and how it looks like all but the NASDAQ is failing, let's look at something much more interesting. The euro currency, traders. I have shown this chart for a week at my Omni Trading Academy. Every class that we've done, and in one of my videos, I showed you this and I said, is this a bull flag? Or are we testing the head of the head and shoulders? Here's the head, shoulder, and the test. Most markets that put in a head and shoulders formation will rally up, test the head, and drop. So, we've been selling this on Wednesday and Thursday. We sold the euro currency, expecting it's probably a test of the head. On Friday, indicators showed us that it was clearly going to make a big move. Now, if it's just a test of the head, the big move will be lower. If that, in fact, is a flag, the big move is going to be all the way up here. So we sidestepped trading euro currency on Friday, and in turn, it turned around and broke down, right? Remember, this currency has been in a bear market. That note was sitting on the chart all week. Now I think it's showing its true colors. Here's where it gets interesting. The date right here where the rally began in euro currency is March 6th. This year, March 6th, this month. Let's take a look at the next chart. The next chart I'm about to show you, traders, is the dollar index, which clearly had a monster rally ever since it stayed above the Omni average. It put in a bearish flag when the euro currency put in a bullish flag. This would be considered a bearish flag. Here's your pole, here's your flag. That should equate to a breakdown here. However, dollars have been really strong, and they went into a little bit of a tailspin. Now, on Friday, just like the euro currency, I wasn't sure what the dollar would do. So I thought, let's back off. The dollar is almost back to the Omni average. If the dollar gets above the Omni average, then all systems go on S&P getting hammered, and the currency's getting hammered, and the dollar right back up into its natural trend. Now, significance right here. 0306, okay? Right when the dollar started to drop, watch how this chart slides sideways. The chart behind it is excellent. All right, traders, here's why I say it's going to get interesting. Right here, the date of the rally that we have just witnessed in the S&P, 0306. The exact same day that dollars started to drop, the S&P began to rally. The S&P got to the Omni average, the dollar's getting to the Omni average. The exact same day the S&P started its rally, the euro currency started its rally. The S&P is failing right here. The euro currency failed on Friday as well. The dollar turned around on Friday and exploded. 03, 06, 09. Pull up that day on your charts. You will see the shift take place. Now, what brings this whole thing together? If dollars started to go down on this day and euro currency started to go up, and on the very same day indices took off, well, if dollar now is starting to head back up and euro currency starting to head back down, that means the S&P has got to head down as well. Following in suit with everything that you've just seen, when currencies were getting hammered and dollar was going up, S&P was going down rapidly. Dollars stopped going up on 03, 06 and started to go down, and the S&P turned and skyrocketed. Dollars as of Friday started to go up again. S&P started to go down. Traders, there is a scenario right there for you. There is a story taking place. Do your own homework. Pull your charts and see if you don't see this as well. So, traders, you've seen those charts. Clearly there is a story there if you were paying attention. Again, when dollars started to go down, out of nowhere, the indices started to explode. Doesn't look like many people put those two things together. I've been watching it since it started. Same time, euro currency started to go up, right? Dollar went down, S&P took off. Dollars have turned on Friday. Euro currency has turned on Friday. The S&P turned on Friday. There is a story there, traders. These markets all talk to one another. Collectively together, they create a symphony. If you know how to listen to that symphony, you'll almost always be on the right side of a trend. That's what we keep, and that's what we try and do in these weekend webinars. We keep trying to enforce what the trend is and how to stay on the right side of it. Traders, I hope this analysis is helping you. I hope these webinars help to keep you in tune with the larger picture, because if you don't know where the larger picture is going, there's no way you're going to day trade properly. So, keep those dukes up for Sunday night. And again, after doing more homework on Sunday, I'll let you know. But the possibility of sidestepping this thing on Sunday into Monday makes a lot of sense to me, and you can see why. Okay, traders, give me a call at there at 702-629-4755. And don't forget, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.